Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, May 3rd, 2019. Happy Friday, everyone. I am Frank Ochoa, aka PivotBoss, and we're looking at the daily time frame of the ES right now. We are about 40 minutes out from the NFP report. So we have the NFP report for the first Friday of the month coming out. Once that is done, we will likely see some sort of movement here. And so again, we're trying to distinguish here whether we're about to see a broader pullback or if we're going to see another buy the dip opportunity. This last time here, obviously this is new highs. We've taken out those previous 29.47 highs, marched as high as 29.61 quarter on the first trading day of the month, and rejected the previous month's high and close right away. We came down here into 2900. As we mentioned, we could be the case because 2900 is the midpoint of the previous month's range, and that's a zone where bulls want to keep bid. Now, we haven't seen much pullback this entire year. This is about as much as we've gotten. We've seen this little pullback and go, little pullback, hold and go, little pullback and go. This was probably the biggest pullback. This was a one-day pullback and hold and go, and we're seeing about the same thing right now. So again, we are at the true edge of the range, but we haven't really seen much pullback this year. This time we got a huge move, then we got this type of day, and then we held and rallied. That's the same type of behavior that's happening right now. You can switch these 2 days out and interchange them with those 2 days. Now we're on this day right here, which is right here. So again, are we going to see that buy the dip inside the trigger zone of the PEMAs and also in the pivot range, or are we going to see a deeper pullback off of these all-time highs? The thing I'm looking for is the previous session's high here. So that previous session's high is going to be very, very important. If price pushes up to that high to begin the day and we start to see a bear trap and rejection at that zone, that could lead to pressure to the downside here. If we close below this midpoint from yesterday or close through 2900, that could be very significant. We could be looking at a dip at the very least, back into the previous month's low. Again, we haven't seen that deep of a pullback yet this year, and everything has still been very, very bullish. We've seen bulls defend the pivot range, defend where they're supposed to on the pullbacks, and we've seen a continuation. So keep an eye on this high right here today. If there's rejection up here, that could lead to a bit of weakness. And again, 2900 is going to be very, very important because any break through that zone opens up a return back toward about 2840. Overall, we could see a continuation toward 3K. I mentioned this before that if we can hold the 2900s here, 3K could be in view on this next rotation, and that could certainly be possible here later on in the month. So we got to see how does the market respond to this current pullback. Currently an inside day, 48% of ADR, 12 handle range right now as we head into RTH and the NFP report. If you take a look at the NQ, you can pretty much overlay the analysis for the NQ and the ES. You can see again a bit of a pullback here. We talked about this late last month that typically speaking, after a bullish month, you may see a pullback into the first week of May that gives you a buying opportunity ahead of what could be the next push higher. Very similar to the ES, we could see a round number test down the road, that is 8K right here. That's the 8,000 level, and on this pullback that could provide a nice little bounce opportunity into that zone. 76.50 right here is the midpoint of the previous month's range, so we could still dip as low as this and still be a buying opportunity for 8K later in the month. Again, the early zone to watch is going to be 7,800. This is kind of the zone we talked about yesterday, that if we pull back, our bear is going to defend and try to drop this thing downward. They did defend 7,800. And now again, if prices push to 7,800 or beyond, is there going to be bear traps there? Are they going to see rejections? Because if so, that could turn things down at least another leg. So we'll keep an eye on this and see how it continues to develop. This one also an inside day, 53% of average range right now at 48.5 points as we head into the NFP as well. We take a look over here with crude oil. This one has had quite a bit of action here lately. High range days, two of the biggest days of the year are those 2 days. This was 260% of ADR. This was 202% of average. And so those are huge days. And I mentioned this to the group a while back, that the first time you see the first 200% of ADR move is about the time where you're about to see much more increased volatility in the days and weeks ahead. This was a high range day, high range day, high range day, and we could still see more ahead. So once we topped out at 66.60 here, the idea was that we could drop as low as about 60 to 60.60, and that's still ahead. So right now we see a drop after yesterday's range. Anytime you have a high range day like this, the tendency is for trading range behavior, compression in the next day, and that's kind of what we saw over here. And then I mentioned that you could use that day for a failed new high, kind of like you did here, for a shot lower, or it could be a full-on, extreme reversal. This one extreme reversed and then reversed from the reversal. So overall, this flow is still kind of to the downside. But if you kind of widen out this chart here, you can kind of see the $60 level is a pretty clean level here. And so if we do drop into the 60 zone, that could be an opportunity for bulls to defend and return it back toward recent highs near 66 to 67. Any failure to hold 60, could open up at least another 5 handles down to 55s. And we could even see VPOC down below if it really wanted to. But again, this market has been very bullish, and this is the widest pullback we've seen all year. So we'll see if bulls defend 60 on the way down. So right now, expecting a narrow trading range type of day early on, given the previous session's range. Once NFP report comes through and everything, we'll see what happens here for the broader market. But overall, expecting some compression here with a downward bias. So if there's any rejections on the way up, if it can't get above 62.70 and it rejects that zone, that could suggest a little bit more weakness towards 60 bucks. Okay, let's take a look now at gold futures. You'll see here with gold, this one has continued to show a bearish lean right here, right? It still continues to show weakness. The retest back into 1290 was rejected, and rejected good, and then price started to push back below the 1280s. So right now this rounded top is firmly intact. We continue to see modest lower lows hit this low by about 6 ticks, and overall, as long as we're below this 1290, things are pointing down right here. And this is kind of what we mentioned on this day when it broke down. I mentioned that the first retest at 1290 will be important, because that will be a retest of value after taking it offered, and typically speaking, bears will keep it offered on first test, and that's exactly what happened here. Breaking through 1280 suggests a little bit more weakness. So where are the downside targets if this thing starts to drop? Again, we're looking at key range targets. From this key range right here, we have the 50% expansion and 100% expansion levels right there, and that's going to be in the 1247s. Let's see, let's bring this up here. A little hard to see there. 1246.30 would be the next major one down, and below that would be 1211.80. So those are the two major downside levels that could easily be reached if this thing starts to make its way downward. So again, rejecting off of value here after taking it offered, that usually leads to more weakness. So again, we'll see how this plays out as we head into the last trading day of the week. Everyone have a fantastic Friday, and I will see you in the trading room. Take care.